Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, for the next few minutes we're going to be looking at Bitcoin. But before we begin, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you already appreciate the work I'm doing on YouTube and wish to show your support for the channel, then why not join Tier 1 for just £5 a month? You still bag yourself an exclusive video each week that won't be available on YouTube. Or why not consider joining Tier 2 for just £10 a month? You still get the same exclusive video each week, but you also get access to the public Discord. There are multiple channels where you can discuss things to your heart's content on multiple subjects with all other Discord members, including myself. You also get access to the entire back catalogue of my educational videos, including the Elliott Wave series, plus other technical analysis videos, including trading and trading risk management. I also host a live session each week via private link to the YouTube. Then finally, Tier 3. For £15 a month, you get all of the previously mentioned benefits from Tier 1 and Tier 2, but you also get access to my monthly dividend calendar where I list my stock picks for the month and all of the relevant ex-dividend and payment dates. You also get access to my stock rating system, which is an at-a-glance rating out of 30 based on company health, value and overall dividend quality. If you yourself wish to look up a specific ex-dividend date or payment date, tag me on the Discord and I can look it up and get back to you. Also, if there's a stock you're interested in and you want me to use my rating system on the stock that you had chosen, tag me in the Discord and I will get back to you with a score. Thanks for listening guys, and now back to the video. Okay guys, welcome back. First things first, I am unfortunately suffering with a bit of a cold again, so if my voice goes really weird or croaky at some point, that's the reason why. If I mute the microphone, it's probably because I'm in the middle of a coughing fit. But either way, I'm going to do the best I can to get along with this. We're going to look at our bearish count, and then we're going to look at our bullish alternatives. So, for those of you new to the channel who aren't familiar with the idea, let's just do a super quick, brief rundown. Topping in a primary free back here, free wave expanding flat here into our A, and then a zigzag here into our B wave for 5 waves down in a C leg for an A, B, C flat pattern at primary degree completing primary wave 4. That's the expectation, and that's been on the cards for months. As we previously discussed, we did have a primary bullish count until the levels here were broken with this high and this breakdown in price here. This flipped us into a bearish stance, and since then we've been observing the price move sideways and lower. So far the count as I have it here has a wave 1, a wave 2, a wave 3, a wave 4, and now in a wave 5 that is going to come down here somewhere. There is the possibility, with a lower low having just been formed, that it's bottomed. Now, I'm not particularly a big fan of that, but it is technically possible, as the 5 has extended beyond the 3, avoiding any form of truncation. So, possible bottom in place, although I wouldn't call it yet, not by a long shot. Now, I'm not perfectly happy with the way this impulse looks. Now, if you're ever suspicious of how an impulse looks, you want to make sure it's obeying the rules first, but you want to get a gist of the general feel of it as well. So if we just have polygon here, and we join our 1 and our 2, we come down to our 3, up to our 4, and then let's take this current low as a potential 5th. Draw a polygon it, point to point, and then drag it out into open space to have a look at it. And ask yourself, does that look like a nice impulse wave? Well, no, it doesn't. You know, is it legal? Yes. The 3's not the shortest. The 4 doesn't overlap the 1. But, excuse me, it doesn't look very pretty, does it, to be honest? We would like to see an impulse at least resemble perhaps something like this. Okay, so there is the potential that something else is going on in here. I mean, I've had it suggested that this is a WXY, and I do think that's viable. This could be an ABC that's still playing out as a 3-3-3 pattern rather than a 3-3-5. That's fine. My argument would be in that excuse me, under that circumstance, that we're going to roughly end up in the same place anyway. So it really doesn't matter all that much how you get down here. This is why focusing on the basic analysis sometimes makes things simpler. The fact of the matter is, as our regression channel here shows quite clearly, we are in a downtrend. That downtrend is continuing to set lower lows and lower highs, and we should not be jumping the gun on calling its bottom until we see evidence that it's done so. So on that note, let's look at some other things, other ideas. So the first thing I want to do is I want to bring up this base support resistance. Okay, so as you can see, we came straight back to this and tested this with this wave 3 low, we're calling it here. We've got this area of resistance and area of support here. We've got this previous area of resistance, 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 and this is now operating as support. The last move down broke through this level, and the candle is currently bodying above it with the wick below it. Alright, so a legal potential low in place, but not the most convincing one yet. Okay, so the next thing I want to look at is, I just want to bring up, tell you what, we have another way of looking at support here, this rectangle here that I've got. Now, essentially what I'm doing with this is I'm creating a broader, wider area of support, because although the top area represents the resistance, previous resistance I just pointed out, you have to appreciate the support and resistance, although we do want to connect as many highs as possible and lows as possible to create our support and resistance, it's not often as simple as that, as there are several other areas of resistance within this zone, okay, and some previous support, as you can see. So it becomes more of a general area rather than a very strict line. Now the next thing I want to look at should be, in our bearish case here, is our wave C targets. This is based off a fib projection of the length of wave A, this projected from wave B to find C, and these are a simple series of flat targets for flat patterns which have expansive B waves, so a running flat or an expanding flat. If you don't know your Elliott wave series, or if you don't know your Elliott wave rules, look it up. Buy a copy of the Elliott wave principle by Frost and Pretcher, or join the Green Star Trading Patreon and watch my Elliott wave series where I cover all of these rules. So the first target is the 100% extension here. I mean, the first is actually the 61.8 for the most bullish setup, right? But we snagged at it, back tested it here, snagged on it here, and then back tested it here, and have been rejected since inside of this channel. Alright, so that would have been the most bullish setup, which would have been A, B, short C, off we go, very bullish running flat. Now that didn't occur, so the next target is the 100 here, which is in amongst all this noise. Now we're not far off of that, and we're into this support and resistance zone, as I pointed out. So essentially we end up with a target box for our potential running flat and expanded flat patterns, which is everything between the 100 and the 1618. Not the most ideal situation or accurate projection, but those are the targets for a flat pattern, and it can end anywhere in between this zone. So let's just bring up our little target box to show that. Here's our target zone that I've been following for the last few weeks, and it's everything from the 1618 through to the 100 here. Now we're already into this territory. You can see how I moved to the bottom of a regression channel would bring us into the target box, bring us into the 100, bring us to the bottom of the channel, and into all this previous support and resistance. Okay, so we're in a situation here where we could find support imminently, or it could just be a move down inside the regression channel, a move into another wave, and a continued move down, and a move back, and a continued move down, and we could continue this downward trend until we find the C, potentially all the way down here at 20k at the 1618. So like I said, it's all well and good looking for support, it's all well and good looking for a potential reversal, but until you see a potential reversal, you shouldn't be trading it bullishly, should you? Alright, so what we want to see, wherever we end up, whether it's the 100, 23.6, 130.18, 1618. Whenever we bottom, we want to see an impulsive move out of this previous trend. That would be our wave 1. We'd want a 3-wave pullback. It could be a zigzag like that. It could be a flat like this. That would be our wave 2. Okay, this would then be the wave 3, and off we go. So it's very much a case of, are you trading this or are you hodling this? If you're a long-term investor in Bitcoin, then there's value to be had as we come back into previous support, because if you're dollar cost averaging, for example, then, and you're in this for years to come and you're fully committed to the idea and the project and you're happy to hodl, then a discount is a discount, and I'm not going to tell you how to spend your money or how to invest. Purely from a trading point of view, we do not try and catch a falling knife. Okay, it's just stupid. And we don't sit on top of a rocket hoping that it doesn't lift off. That's also stupid. We wait until we have directionality and we have support for that directionality, and then we trade with it, not against it. Okay, and that's all we want to see. We want to see an impulse out of here, or out of here, or out of here, or out of here. Whenever it comes, we want to see an impulse. We want to see a shift in momentum conditions. We want to see volume return to support that move, and then we wait for a retracement, and then we buy with a clear stop, and then we can get going. And that's it. That's all we're really looking for. So let's just add a bit more detail to the chart here. I should have a fixed range. Here it is. Excuse me. So we've got these 3 peaks in this fixed range volume profile with the point of control down here at the bottom in amongst all this noise here. Okay, so point of control is still some distance away. Now we don't have to come back to our point of control. It's just the greatest area of market acceptance. Now the greatest number of buyers and sellers was at this point. Okay, and that's within the previous lows. So that's still potential area of support. We can imagine that if we project this channel forward, let's just do that, take our regression channel, assuming that the trend doesn't break anytime soon, and we can see how we have plenty of room to work our way down to these levels and still continue this downward trend. Now it doesn't have to hold. We could have some alternative pattern taking place, which we can discuss in a moment with our bullish options. But for the meantime, the bearish count is still my primary count. I'm looking to see if we get any kind of bounce from here that takes us out of this channel in an impulsive fashion. If that happens, then we have to consider the possibility that we've had 5 waves complete down here for a C. Like I said, I have my suspicions that that's not the case, and I have my reservations about how ugly this 5-wave move is, but it is legal, and that's that. Right, so that's how I see the bearish case at the moment. We're still in a downward trend. We are still setting lower lows. We're still setting lower highs. You know, like I said, if you want to trade this, we don't catch a falling knife, and you just got to be patient. If you're a long-term investor, you determine what value is at the end of the day. Right, so let's shift all of this off. Bearish case out of the way, get rid of this. Excuse me. Alright, and let's have a look at the bullish count. Okay. Wish I could tell you that you were looking at a immediate turnaround and we were bullish right this second, but the fact of the matter is the best bullish count I can come up with is pretty bearish in the short term anyway. It suspects that we are going to continue to head lower. What I will say is that the structure of this being a 3-way move down does appeal a bit more. Now we've already discussed the possibility of WXY to appease those out there who are considering it, and I think it's perfectly valid interpretation to consider this as a potential 3-wave move in a Y. That's fine. If that's your count and your own TA supports that, then stick with it. But here's a bullish interpretation. which is we've done a 1 already, and we are now retracing in a wave 2. It's going to be a deep one, given the length of this initial 5-wave move for an A. In fact, it's going to be so deep because if the C were to reach parity with the A, it would actually be invalid. It would go beyond these lows, meaning that it couldn't be a 1-2. So we are already expecting the C to be shorter than the A. It literally has to be in order for this count to be correct. Now, that is not impossible by any stretch of the imagination. It happens frequently depending on the pattern that forms. But as a rule, and I don't mean strict rule, I'm talking in a vague sense, as a guideline then we should say, we should be looking for parity between A and C, which would be 100% here, which of course, like I said, would invalidate that. Bear with me one moment. Okay, sorry about that, I just had to stop for a drink for a moment. Okay, so where was I? So this is the idea that we've done a 1, we're going A, B, C into a 2. So what we would normally do for an ABC if we got a zigzag is we would just use a normal channel, parallel channel. Take the B, come down to the A to help project the C. Alright, now as I said, A to B to C at 1 to 1 would take us below the previous lows, cancelling out the idea that this would be a normal zigzag, a 1 to 1. So the C has to complete before then. Alright, so the C could maybe stop at the median line of the channel here and still be a very deep retracement. Very, very deep. Perhaps this is 1, 2 and we're about to put in the 3, and this is 1, 2, 3, 4, 5 and a 3 that's about to happen. 4 comes to here and 5 just ekes beyond it, and then we get the C at the median line here. A visit right down to the bottom of the channel I don't think is going to be acceptable here, as it will cancel out the idea of this bullish count. So let's take a fib from the low and run this up to the high. So you can see how we came straight back to the golden ratio, right? We came into the 61.8 and 65 here, which is all this previous resistance. Now, we know if we go back to our base support, that overlaps or goes just beyond, excuse me, hit the help button by mistake, goes just beyond the golden ratio here. And we essentially bottom in our first move down, which we're saying is the A, in amongst all of this. So we've got the long-term support, we've got our golden ratio 61.8, 65. We just poke our noses through it slightly. So let's change this to a wave 2. A wave 2 retracement gives us this, the 78.6 is the blue line here, and the 89 is right here. So this is 90% retracement, 89% retracement. Any deeper than that, and it is just, you know, sheer fluke if we bottom before the previous lows. So we've got some support below us. We're bodying the candle above that base support at the moment, but that could just be temporary before we continue to move down lower. Let's just bring back that fixed range and see how that point of control is, where that point of control is. So that point of control, this is taking everything from the prior wave 3, intermediate 3 for that wave 4 correction, all the way projecting, and everything since projecting it forward here. So the reason I've chosen the 3 to 4 at intermediate degree is because I'm saying that this is 3 here, right? Now in the bullish count we've gone A, B, C expanding flat into a 4, 1, 2, 3, 4, sorry, that's wrong. 1, 2, 3, 4, 5 into 1, into 2. But in the bearish count, remember, we were saying that this was going to complete as a 4. This was 3, this was A, this was B, and this was going to be C. So the reason I've included that volume profile fixed range within the prior wave 4 is that's where I expect the larger wave 4 to complete, inside the price territory of the prior wave 4. That's really, really normal. Oh, excuse me, just moving charts around randomly. So like I said, that's extremely normal to finish the larger wave 4 in the wave 4 of 1 lesser degree. Okay, so that's basically the bullish count, which is we've done a 1, we're going to bottom in a 2. I don't think it's complete yet, as I suspect with the bearish count as well. I think there's room to move lower in both instances. So let's just remove this fixed range. Okay. So that's the counts as I see it. So let's just clear the counts for a moment. We'll add this parallel channel to that bullish count. And then we'll look at our indicators. So is there anything positive at the moment? Well, we've got a low and a lower low. So what's our RSI telling us at the moment on the day time frame? It's telling us that we're oversold. Alright. But as I've said multiple times in the past, that's not enough to ever buy something. Is there divergence here? Is the question. Barely. Barely. If there's any divergence at all, it's minor. Alright, and divergence isn't divergence unless you're looking at 2 lows or 2 highs, right? They have to be confirmed. The only thing you can say other than that, excuse me, is that you have divergence between a previous high / previous low and current price action. So if that exists, it exists only marginally in the RSI, and it's only between previous lows, a previous low in this case, and current price action, not a confirmed low. If you get a confirmed low in here and an impulsive move out which breaks this downward trend, then we can call that a low, and we can say there was minor divergence down here, bullish divergence, but we can't say that yet. Now on the MACD, however, it's much clearer, and there does appear to be pretty strong current bullish divergence between the previous low and current price action. Okay, so signs of life, but nothing particularly convincing yet. Nothing that I would hang my hat on. Right, so all in all, not a bad sign. Now if we come out to the weekly time frame, we're still not in oversold territory on the weekly time frame. Last time we visited it was March 2020 during the you know what, when it all kicked off. So we might need to have that revisit into oversold territory on the weekly time frame, what I like to call a round trip from overbought to oversold. Okay, now I imagine on the monthly time frame we should be probably getting a sell signal at the monthly degree by now. We have been moving sideways for a long time. Just come out and have a look. Yeah, it's literally just occurred actually. There you go, you got a red bar appearing on the histogram, and you got a monthly sell signal here. Right, this is the average crossing over the signal on the monthly time frame. So last time we saw that from positive to negative was December 2019, and then the breakdown into March 2020. We had the crossover here in February, and the last big bear market obviously was the crossover in June or June of 2018, and then run down into the lows here. And that was bottoming out December 18 and slowly working our way back up on the monthly time frame. So with a bearish signal like this on the monthly time frame, it could be snagging like this, or it could be something like this. Too early to tell. Okay, huge bear market, or just temporary before moving higher. Alright, so just something to be mindful of when you get a momentum sell signal on the monthly time frame. You've got to be aware of it. And also on the monthly time frame we have extremely strong bearish divergence between 2 highs on the RSI, which are lower highs, and 2 higher highs in price. Okay, so that's bearish on the monthly time frame. Now let's bring up our moving averages while we're here. Okay, so since we're here on the monthly chart, previous support has been provided in the most extreme of bearish circumstances. Let's bring it into log so we can see clearer. By the 60 exponential moving average here, this flash in the March 2020, bodied well above it. These bodied in amongst it. During the bullish phase, the 10 and the 20 operate as strong support throughout the bullish move. We are still above the 20 on the monthly time frame and trading below the 10 at the moment. So as you can see, it's possible, just like we had in our wave 1 here, to move into this area and then continue a bullish trend. If things are more bearish and that long-term monthly sell signal plays out, a more substantial sell-off to lower lows would be more likely. But even down here at the 60 EMA at 21,000, that's near our 1618 extension for the A, B, C for a larger flat pattern. That would be obviously a very powerful bear market, but it would still be a 3 into a 4, and it would still be well within the invalidation point. Sorry, that's a bit of a wonky straight line. Let's actually put a... Do I have the invalidation point for the long-term count on here? I should have. No, that's that one. You'd think I'd have that there, really, wouldn't you? So let's put it on now. And we just need a horizontal. Here's the top of our wave 1. And here's our long-term bullish invalidation. So all the way down here. Okay, so I should have done that ages ago. I think I must have deleted it. Let's get a price label down here as well. So that's all the way down at 13,943. So a long bloody way away before we invalidate the bull market count. Okay, long-term bull market count I'm talking about. I don't think that's necessarily on the cards at all. I think we are probably going to find a low a little bit beyond the lows of June, would be my expectation, but we could come down deeper. It's just a fact that could happen. So on that note, let's come back to the day time frame for a moment. Since we're in log scale, let's throw up the long-term support geometry and see if there's anything here which points to why we've done what we've done. So let's bring up the count of the impulse from the low, and let's bring in our bearish count, shall we? So here's our 1, here's our 2, so here's our invalidation point we just added, which is here. Let's bring that price label over here. It's roughly what it is, doesn't have to be precise, we're so far from it. Let's get, which one's this? This is the wave C extension, isn't it? So let's just remove this off for a moment. Okay. I have to tell you what, it'd be easier if we just get rid of the count from here. It's a bit busy. Okay. So we've just hit the 38.2, which is the green line here, and that's provided support temporarily. We've whipped down to it. Come through the median line, danced around it for a bit, and yeah, we just wicked to the green line here, just slightly above it, the 38.2. Still got the 50, the 61.8 and the outer bound all the way down here. There's our target box. Okay, so as you can see, it's 20 grand's worth of price action. Like I said, can't be any more accurate than that when projecting something that hasn't happened yet. As you can see though, there's still plenty of room. Just have to accept that. There's plenty of room to come all the way down to the edge of the pitchfork here. Still be well within inside the invalidation point before going higher. I don't think that's necessarily going to be the case, but it could be. I mean, if we just take the previous lows, for example, that's down here well into the depth of this target box, isn't it? If we're coming down to test the previous lows, then it could be A, B, C. If it stops before it, it could be A, B, C, go beyond it if it's WXY. Or it could be something completely different. It could be 1, 2, 3, 4, 5, something like that for the C. Okay. Right then, so I don't think there's much else to look at really now. What are our moving averages telling us? We just had the crossover of the 10 and the 20 through the 250. You know, they're all starting to trend downwards now on the daily time frame. Just starting to roll over on the 250. 60 still hasn't crossed the 250. All trending down, all looking very bearish at the moment, having broken the 250, which is operated as support here and here, resistance here, temporary support here before it finally broke down. And on the weekly time frame, how are we looking? We're hanging around the 60 EMA at the moment, which has provided support here. Doesn't look very strong here at the moment, so we could be in for breaking this down more violently. Basic analysis doesn't look particularly positive at the moment, to be absolutely honest with you. So I think we have to just be patient, be logical, be rational, and wait until this thing turns around before you dive back on it. Really, I don't see any reason to try and trade a falling knife at the moment. I'm a hodler as well. Let me just make that absolutely clear for those of you who are getting sweaty and getting nervous. I've been in crypto since 2015. Alright, so I've ridden, and that's not as long as a lot of guys out there who've been in it for way longer. I was pretty late to the game. I've been investing for years and years, but I was quite late to crypto in that sense. There were guys who were well on it, but long before me. But I've been through the big bear markets before, so I know what it's like to sit there watching everything crash. Okay, there's a portion of my portfolios that I hodl, but I will always hodl because I'm a long-term believer in these projects. There's what I trade, and then there's all the other forms of investing and trading I do as well. So how you define value is up to you if you invest long term, but from a purely trading perspective, trying to get long into this, if you're already short and you were more pessimistic than I was, and you saw the initial 1-2 down or this 1-2 down and you're still short, there's no reason other than to make sure you have a sensible stop and move it into profit. You know, if you want to, it's up to you. There's no reason to change that viewpoint currently. However, if you want to go long, you gotta wait for this to turn around. You just have to wait for this to turn around. Let's have a look at the volume here. No, it doesn't matter. I'm on Bitstamp by now, so you can go, oh, the volumes, because look, I've looked at this on multiple exchanges and the volume's garbage through this entire move. Right? So, for those who are saying that this is Bitcoin topped here, it's over, and this is a massive impulse down, I don't see volume supporting the idea of this being an impulsive move down. Okay? But I certainly don't see any evidence of volume supporting this being an impulsive move up either. It's just flat on the floor here. So we're going to want to see whether we come back to the edge of the channel, come to the 150s, anywhere in this target box, and we continue to project forward. We're going to just want to see a 5-wave move up, an impulse, a break of the previous trend, right, supported by volume, positive shift in momentum. Okay, now momentum indicators, preferably off of bullish divergence if it occurs within the next few weeks or next month or so, and then a retracement, and that's your entry for a long. Okay, alright then guys, I think that's all I've really got to say about Bitcoin this week. We'll see how things look in another week's time. Have we reversed out of here? Have we found support? Have we bounced? Have we continued to collapse? We will continue to do weekly updates and keep an eye on things, but that's really all I've got to say for the moment. You don't assume something's over until it's over. Alright, so if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, massive thank you to my Patreon subscribers. Your support is greatly appreciated. I do have my weekly exclusive coming to you soon. You should already have it, since you'll get early access to this Bitcoin video before YouTube does. And you will also have access to what will be a weekly exclusive on XRP and Tron coming your way as well. So if that sounds like something you're interested in and you're new to the channel and you want to become a patron, feel free to follow the link in the description box below, have a read of the tiers, see if there's anything you're interested in, and feel free to join up. Also, if you're not following me on Twitter yet, please do so, as I always notify when I upload a new video to YouTube. Alright guys, take care of yourselves, all the best, and I'll be back looking at Bitcoin next week. Take care. Bye bye.